Hello traders, this is John Kickleiter, Chief Strategist for DailyFX.com, and we're heading into a U.S. public holiday which will close off the markets, but that closure may just be isolated to the United States and a couple other countries, but it does have a material impact on the trading conditions that we as FX traders typically see. So I want to make today's Forex strategy video specifically about what to expect from the markets and what to potentially trade and how to trade it around this holiday, the Thanksgiving holiday. So the first thing we're going to look at is the fact that yes, we indeed do have closed markets. Now you can see here that the U.S. markets will be offline for the entire day, and there is historically a expectation that those low trading conditions will spread to the rest of the world. You often see, in other words, that Europe and Asia are quiet as well in the lead up and follow through after that decision, or after that day off for the United States. We also know that the U.S. will close early on Friday, and this has a kind of a weekend holiday, an extended 4-day holiday for many U.S.-based traders in institutional level, and that in turn can curb risk trends quite substantially. So this expectation of quieter markets should be taken into account. And of course, when we're looking at it from a risk perspective, something like the S&P 500, which as you can see in this daily chart, extraordinarily tight trading conditions. All right. And you can see from the average true range that things have gotten really quiet. We do have a technical congestion pattern here, a possible breakout opportunity sometime within the foreseeable future, if not through the end of this week, then perhaps the opening 2 days of next week. However, we know that these quiet market conditions are going to materially alter the risk-on, risk-off factor. All right, and this absolutely is going to be a carry-through or a carry-over to the trading of the majors. Now, I've done some calculations for you, and I wanted to see over the past 10 years, how has the S&P 500 first responded in the day before and day after Thanksgiving? Of course, as I said, closed on Thanksgiving. S&P 500 will not trade that day, and the day after is going to be a half trading day essentially. So this is the actual change on the day before and day after. All right, and going back over the past 10 years, you can see that typically is a very mild turnover, though there have been some days that have have moved over 1%. But recognize, these big movers were in 2007, 2008, and 2011 typically, and those, as we know, were exceptionally active market conditions. If we look at the daily range, the comparison of active to less active trading days is kind of a historical norm, has played out pretty nicely here. We have had a very mild lead into the 2013 Thanksgiving, so the comparison, though, the day after is typically more active or more aggressive than the day before Thanksgiving for the S&P 500. But of course, we're FX traders. We want to know how this impacts the majors. At least I looked at the core majors: euro dollar, pound dollar, dollar yen, and Aussie dollar, to see how these currency pairs typically respond around these market conditions. All right. So here you can see actually the comparison of all of them. Thanksgiving Day, day before Thanksgiving Day, and day after Thanksgiving Day for the four majors. I also threw in the US dollar in here. And you can see that there are a couple pairs where the day after, all right, is more active than the day before Thanksgiving. Thanksgiving Day is typically very quiet, all right, and that is going to be historical norm, and it will likely be this case as well. But we will take a look at some of the other event risks for these pairs to see if there's anything that can spur volatility in the absence of liquidity. But you can see that if you want to, say, trade a bigger swing on a Friday, it's better to go for the euro dollar, pound dollar versus the Aussie dollar and dollar yen, because typically they are more quiet than their day before. All right, so that's something to keep in mind. Here is the Euro USD to start off our conversation. The light blue is going to be the day before Thanksgiving. The red is Thanksgiving itself, and the dark blue is the Friday that follows. All right, and you can see historically here that the Friday is typically more active. Now you can see this is a pretty consistent trend of quiet conditions for Friday, and knowing that there is a curb on risk trends is certainly going to play through here as well. This is a range or a level of activity. It's kind of like looking at volatility. We can look at the performance, the actual change for the Euro US dollar over the past 10 years, but it's a little too much information for this video. You can see actually the changes on the real-time news feed going back into some of the more of the historical measures. But you can see the relative position more active on the day that follows Thanksgiving typically. All right, so that's going to be something that I would look at a Euro USD. Under those circumstances, I would expect that the Tuesday before, which was relatively quiet, you can see the change wasn't there. You did have a very mild range, but there is something of a wedge, right? Another rising wedge. There was a rising wedge here that ended up as a break to the downside. Another rising wedge. This can be a break to the upside or downside. It does not have to have a directional bias to it, but it is a possible break candidate. And if it's a breakout through Friday and an increase in activity, that's something that we can look for as a possible short to medium term swing trade. Now, looking at the event risk on the docket for the European calendar, you got to be careful because even though Thursday is going to be quiet on the risk front because of the U.S. holiday, you have some sparks that can take advantage or amplify the low liquidity conditions. We have German unemployment, which is a known volatility inducer. We have the confidence indicators, and of course on Friday I think are the more important factors, the unemployment and CPI figures. Remember last time, these two indicators had a very material impact, or at least influence, on the ECB and their decision to cut rates. All right, if there's going to be a follow-up QE program, it's likely to be through these pieces of data, so these are going to be important. You can watch this pair for its technicals and fundamentals, and it might be a more active short-term swing trade. Now, if we're looking at the pound dollar, this is the other currency pair, which I just showed you, has a more active following day, Friday, than it does the day prior to Thanksgiving. All right, so this one is another one that might be a medium-term swing candidate. It's all the more interesting from a technical perspective because we have tentatively broken this long-term wedge top here, and this is a volatility event. All right, if this were under normal circumstances, it might have had strong volatility, but obviously since we are heading into a quiet period through Thursday, then this can actually see a level of consolidation, and it's going to be very difficult for follow-through. Now, looking for a follow-through on Friday is a possibility, but also as we see consolidation after a meaningful technical move like this can also turn into a reversal, proving a false breakout. Now, when I look at the fundamentals for this, you still have meaningful event risk. Thursday is probably the low end because we are talking about the BOE financial stability report. We've had a couple of those come out recently from different countries. That has not been very market moving. Same with Friday. We do have some event risk, but not necessarily the heavy moving stuff. So in the absence of major U.S. and major pound data, this is going to be difficult to generate that medium-term swing from a fundamental perspective. All right, but those technicals create kind of a vacuum in which the market is going to try to fill its technical bearings. All right. Now, comparisons. Aussie USD looks like it's very, very interesting. We have had a remarkable 6-day consecutive decline. A number of you guys are using this indicator. This is actually for indicator from fxcmx.com, so feel free to download it and use it to your leisure. But we've had a 6-day decline. We've only had a few of these in the past 3 years. All right, decline or advance. And as you can see, we've had a pretty aggressive run of this move. Now, if we are to see something like this, it would suggest that this has really strong follow-through potential or is wound up like a spring for a potential reversal. All right, well, historically we see that the Friday that follows Thanksgiving is typically less active than the lead-in. And the lead-in was quiet. All right, so we look at this, we look at the economic docket, we do have a couple indicators online. All right, private capital expenditures for the third quarter. You have home sales, which is important for the financial stability of Australia for the month of October, coming out this morning, and then really nothing Thursday night going into Friday morning for Australia. So this one is a risk-sensitive currency pair. It's a carry-sensitive currency pair, and we know that risk trends are going to be sabotaged by this situation. So when you're looking at something like this that seems to be so well positioned for a big move on low liquidity that can be amplified by this, it might actually be truncated by these circumstances, and we see it turn to the more traditional aspects of what we'd expect in a holiday trading. The same can be said of the dollar-yen. This seems like it has a massive move with this continuation that we had a drive pretty much up above 102, and once you get above 102, it's the biggest or highest we've been in 5 months, nearly 6 months, but it doesn't really have strong follow-through potential. All right, and that's because you typically see that these this pair really does not see strong follow-through historically on the Thanksgiving day or the Thursday afterwards. Activity levels are low, and you can see from this performance chart that the actual change is low as well. So it's interesting that the most active currency pairs, the ones that seem to have the most potential with the dollar, yen, and Aussie dollar, are historically less inclined to show big moves during the Thursday, Friday, during the Thanksgiving time, while the pound dollar has a little bit better time, has some fundamental and technical setups that can be worthwhile, but the Euro USD, which is it looks technically the most congested, also has a history of being the most active from the transition from Wednesday to Thursday to Friday. So that's just putting it all into context. Of course, if you're a scalp trader or an intraday swing trader looking for more reasonable targets, something like 20 to 40, maybe 60 pips, that might be more doable under these circumstances. And in fact, it might be the preferred route compared to a meaningful 100, 150 point swing. However, there still are different pairs that we should treat differently. We should look at certain types of pairs that are more assigned to congestion and look at the others that might be better for a little bit more trend development or breakout opportunity, though the breakout opportunities I'd be very, very careful about. This is more about trending and more about range conditions through these final 48 hours of this trading week. But that's a little bit of a look through of the Thanksgiving holiday trading conditions. We'll do another Forex strategy video tomorrow. Until then, good luck trading out there, and I'll talk to you once again on Thursday.